Hello and welcome to Crypto Weeklies. Today we are going to talk about Hbar this and conduct an AI-based forecast, also risk analysis for Hbar. This is the risk level based price action for Hbar. This is price on the y-axis, time on the x-axis, and also the color codes along the price action. The key idea is when the risk levels are low, that is, these are normalized between 0 and 1 based on the regression function. The deviation of the price with respect to the polynomial regression function for Hbar. The key idea is when the price is too far gone from the fair value regression function, the risk levels are elevated. At that point in time, exiting the market is favorable. So for example, when the distance between the regression line and the price was the maximum in September of 2021, that was risk level is 1, and at that time price at around 50 cents, exiting at that point would have been beneficial. Similarly, during some of the lower risk levels, such as starting June of 2022, when the price was at 10 cents and then sub 5 cents at level when the risk levels were 0, essentially during December 2022, that was the lowest risk for Hbar, accumulation of Hbar. This is not financial advice, this is data science and statistics based regression analysis. So none of the content is financial advice on the channel. With this in mind, let's check today's, that is June 24th, price at around 8 cents. You can see it over here. Hbar is one top 30 crypto by market cap, 7.64 cents over here, average at around 8 cents. Risk level at 0.42, so definitely not in the lowest risk zones, about between third and fourth lowest risk at this point for accumulation. One reason being that Hbar has not been doing that well to keep the regression function up. Over here you can see that the shape of the regression function has diminished, and the price, the fair value of Hbar is in a decline starting 2023. This is because the price has not kept up with time, but it is kind of like a cyclical or sine wave based pattern where price goes up, then comes back down, and then again has a tendency to go up. So which is different from, for example, if you look at Bitcoin's regression analysis, the same polynomial function, when you apply it to Bitcoin over here, because Bitcoin has kept going up with time, you can see that the slope is an ascending slope for the regression function. This is not a linear regression, this is polynomial regression function, so it doesn't have to adhere to price has to go up with time, but but more like a polynomial shaped function where it can go up or down depending on the market structure. So this is again something about Hbar that I wanted to share today. We'll look at some of the indicators, summarized news related to crypto market. Most of the narratives are bullish. You can check Shiba Inu AI based price, then new crypto company over here, then Dave Ramsey doesn't understand Bitcoin, again Tether to stop supporting EOS and Algorand, and then Bitress, and also 1.8 trillion SHIB related news action, and one bearish narrative related why Bitcoin's price is falling. That is summarized news related to last 24 hours. In terms of PeakValley, this is the composite risk score for all of the top 100 cryptos of the market, covers about 90 to 95% of the entire crypto market by market cap. And this key analysis is over when the normalized score of the risk levels is below 0.2. That's a favorable entering, that is the time where entry is favorable in the market, whereas when the risk is above 0.75, at that time exiting the market is more favorable, like it was in 2021 November as well as May. Whereas when the risk scores were low, like June, July of 2022 till about January 2023, again brief periods of risk more than 0.1 in February 2023, essentially till October 2023. That was the, per this analysis, the accumulation zone. Right now the risks are coming down. They might, you might see the color code shift because they are really close to the 0.2 level, have been in a decline mode since March of 2024 till about June of 2023. So if there is a further how these risks are calculated is the percent drawdown as well as alpha, beta, volatility. If any of these things decrease, the risk score should go down. This is the key idea. This is one single metric to analyze where the market is at this point in time. So the narratives which have gained some popularity over the last 7 days, this is again our attempt to understand the crypto market using one single word, cloud. This is all of the crypto related narratives on YouTube. This is the popularity of Bitcoin as a narrative, Ethereum, lot of discussion related to XRP, Polkadot, Solana, and Cardano are gaining some of the popularity, as well as meme coins in general are being discussed. New and hype related to coins is also being discussed. So not so much bearish narratives over here, but also lack of any bullish narratives. If there were bullish narratives, they would have had their own little space on the word cloud. So again, market not in a full on bull mode. Again, people are talking about dumping, so that means again there is a high chance that market is dumping over here. These two narratives are quite the same. They need to be clubbed together. So again, this is always in development, and for this you don't have to pay or sign up for anything. The link is on the bottom of your screen. In terms of Hbar related, discerning if it's overvalued or undervalued, today you can see with this MVRVZ approach, the price is in blue for Hbar, and the MVRVZ, which is market value, realized value based Z score. If this red line is below the zero threshold, that means the token or crypto is undervalued, which is the case for Hbar. Again, in terms of its polynomial regression analysis, this is without any it includes the standard deviations on top of the fair value function. So over here the price of Hbar is in white, the weekly price that is, and the fair value is in, you can see the polynomial function has taken a sine wave kind of shape. And if we check at this point of time, if 22 cents is the fair value per our analysis, and the current price is below the one standard deviation bottom, but the two standard deviation bottom is holding some support. That level is at around 9.5 cents, the price at around 12 cents. So let's see if this two standard deviation support holds. The price spends less than 5% outside to the downside outside these two standard deviation regression bands. You can see historically speaking, the two standard deviation regression band have held most of the time held support. If not, the three standard deviation regression band outside of which price rarely spends any time. About 1% of the time it should spend, because this covers about 99% confidence. This is currently at around 6 cents. So let's see what the prices hold in the upcoming weeks. This gets updated every single week or so. So if you're interested in looking at, you can check it out on cryptoweeklies.com. In terms of analyzing the simple moving average based risk level, the other color coded risk level, the one that we discussed, was linear or polynomial regression based analysis. This is just the difference between the price and the 20-week simple moving average. Right now, per this analysis, the risk levels are at 0.24. Again, third best time to dollar cost average. With this approach, you can see that there are times where the risk levels are close to zero when it's the peak of the bear market, because that's when the distance of the price and the simple moving average is the largest, but that doesn't mean it's close to the bottom. During the bottom formation, the risk levels are almost always between 0.2 and 0.3, because during the bottom, when the bottom is found, the price tends to be close to the 20-week moving average over here as well. Again, we are essentially in the same risk level right now that we were in January of 2023, when the price was at around less than 5 cents, and again over October of 2023, when the price was close to 5 cents and the risk levels were slightly elevated than today. So with this, I would like to conclude the video. Right now the risk level for holding or accumulating Hbar per the SMA analysis is at between 0.2 and 0.3. In terms of the regression based analysis, it's at around 0.4 to be precise. In terms of regression analysis, price is close to the 2 standard deviation bottom. Again, not a bad time to get in, not financial advice. Hbar is undervalued at this point in time. And the last but not the least, the AI based forecast that we have for Hbar using machine learning algorithms such as XGBoost and ARIMA and LSTM. Now that we are in the last week of June, starting July, the base case scenario forecasted by our model is between 7 cents and 7.7 cents. Price is at this point close to this 7.7 cents territory, but if the market were to go back to bull mode, 8.7 cents to about 22 cents, that's the bull case scenario forecasted by our model from June till about December of 2024. And on the other hand, if the market were to correct, the theoretical 1 standard deviation bottom is at around 3 cents, between 3 cents and 6 cents. So this is our AI based forecast for Hbar. And with this, we would conclude the video. Hope you like this content. If you did, please subscribe to the channel, also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.